Hey, good afternoon, everybody. Welcome back to my YouTube channel. I am Cornelius Camp, a school counselor by day and real estate agent by night. I hope everyone is having a great day, a great afternoon. Wanted to talk to you all today about mortgage rates, actually obtaining a mortgage. The mortgage rates nowadays are fairly low. They've been low for quite some time right now. But I made a video earlier about the mortgage rates actually going up, or the interest rates actually on the mortgage increasing by the end of 2018. So a lot of people are looking for ways to be able to be pre-approved for a mortgage right now and get a loan so that they can purchase a condo or home or so forth. Um, but I wanted to talk about 5 things that you can do to kind of either delay that process or mess up the process. Um, just things that you can just be doing absent-mindedly and not even think that it can have a big effect on you. And next thing you know, your process is being delayed and you won't get pre-approved until you figure this out, and you have to produce this extra amount of paperwork, and the next thing you know, the condo that you had in mind is gone off the market because you haven't gotten pre-approved yet. So just wanted to talk about some of those things. The first thing that I want to talk about was waiting until you can get that 20% down payment. When you're dealing with real estate, 20% down is kind of like the golden number that everyone reaches for, because that way you can qualify for both the FHA loan and the conventional loan. And then also you don't have to worry about the private mortgage insurance, or the points rather. Sorry about that. That you can get tagged on to your loan if you don't have the 20% down. Um, but the rates are so low nowadays. A lot of people, 20% is a lot, no matter what you're buying. And a lot of people might wait around and say, "Oh, let's save up. Let's do this, do that," and then you'll end up missing out on the mortgage rates that we have right now, the interest rates that we have right now, this day and age. Because, like I mentioned, they're going to be going up. So don't just think that if you don't have the 20% down, that you shouldn't go out and try to get pre-approved and get a loan and make an offer. Just go ahead and go for it. At least make sure you do have some down. There are some programs out there where you can get as little as 3% down or 3.5% down, and there might be some out there that might allow you to go even lower. So don't let the 20% down deter you away from it. Keep going after your dreams, and just keep asking around, talk to different lenders, and see what they have to offer. And you may be able to make a purchase of what you have at the present moment. Okay. Next thing, you should not be changing jobs. Those are two big things that you are looking for. You changing jobs and buying a house are two major life-changing events, and you probably shouldn't be trying to do both of them at the same time. It's going to be really, really difficult. Changing jobs, once you apply for a loan, you got to show proof of insurance, you got to verify employment, and if you just change jobs, you haven't been there 90 days. Who's to say that this is going to be the right job for you? Who's to say that you're going to last? Who's to say that um, you know, you might not get laid off, or the company is not a valid company, or whatever the case is. But changing jobs is definitely not a good thing, because it takes away your verification, your validation of employment. And that's one of the main things that they look for. Obviously, if you're not employed and you cannot produce a consistent amount of income, you really not going. They're gonna say, well, if you can't do that, how can you produce the monthly payment to pay back this loan that we're going to give you? So it's something to think about. Not trying to tell anyone not to be looking for a job, but just something to think about, because it can be a little bit tricky if you're looking for a job and trying to get a loan at the same time, or you're switching jobs and trying to get a loan at the same time. Okay. The next thing, only meeting with one lender. As a real estate agent, whenever I meet with a buyer, um, one of the things that I try to tell them that I can help them with is that I kind of have a team or I have resources of different people for different stages of the buying process that you're going to need, whether it be a lender, an attorney, an inspector, um, a contractor. If you want to do a little bit of rehabbing work, um, those are some of the things that I can offer. But the one thing that I do tell you is that, if my client happen to has a person that they know, they might know an attorney or they might know a contractor or something like that, and that's fine. That's great. I don't have any problem with it. But if they want, my recommendation, I always at the very minimum give them three, no matter what it is, and three different resources. And that's the way you should approach getting a loan. You should talk to three different lenders. Don't go with just the one person. I mean, unless you have a strong relationship with that person. But if you're just around looking for a lender, you don't know anybody, you should always interview three different people from three different banks, because one bank might get you an interest rate lower than the other bank, and excuse me, they may have programs that they can offer you that another bank might be able to offer you. It's just different. You need to get along with your lender. How efficient are they? Are they going to be answering your phone calls? Are they going to be answering your real estate agent's phone calls? If you guys see a house on Saturday and you want to make an offer, well, you need to get in touch with your lender before the agent can submit the offer, to make sure that you guys are good and legit and ready to go. So don't just go with one lender. Try to interview three and then make your decision from there. Okay. The fourth thing, moving money around in your accounts. Just a quick little story to kind of give you an example of what I mean by that is about 4 or 5 years ago, whenever I purchased my condo, my wife and I decided to take my parents to Puerto Rico. That's where my wife is from. And it was like their 40th anniversary, wedding anniversary or something like that. And my mom was turning 60. So it was a lot of celebration going on. So anyway, we decided to take them to Puerto Rico and pay their trip and so forth. And I put everything on my credit card. And because my wife wanted to pay for half of the trip, she just wrote me a check, which was fine. And then I went and deposited it. Well, in that time, I think we had already submitted an offer and had already gotten the offer accepted, and we were in the process of purchasing our condo. Well, I made that deposit not knowing anything. My agent didn't tell me anything, and the lender didn't inform me at the time. And that threw up a red flag, because it was almost like, okay, where did this, whatever $1,000 come from? And why is it, just in there now? Why is it not consistently? And I just explained to them everything that happened. It was no big deal. But after that, I had to go through paperwork. My parents had to verify that that's what I was doing. My wife had to write me, or I had to give my wife a receipt for the money that she paid me. I mean, it was just a bunch of extra headache that I really didn't need at the time. And it really could have been avoided. So don't try to move money around. It's going to throw up a red flag. It's going to look suspicious, even if it's legit, even if it's for a good cause. Just wherever your money is at the time you apply for this loan, just leave it there. No big purchases, no big deposits coming in. Just save all of that stuff for later, because it'll save you a big headache, trust me. And then number 5 is to apply for a new line of credit. However many credit cards that you have at the moment, stick with it. Almost like the whole moving money around type thing. Wherever it is your finances are at the time that you apply for a loan, leave it at that. Don't go get a new credit card. Don't go and start furniture shopping for your new home and take out a credit card from Lazy Boy, or don't go, and get a credit card for Best Buy so you can get 25% off of the surround sound that you're going to put in your new house. Don't do any of that. Just leave the credit the way it is. If you got 3 credit cards, leave it at 3 credit cards. If you got 15 credit cards, leave it at 15 credit cards. Do not add on a new line of credit. You can pay off the credit cards all you want to, but just don't add on the new line. Okay, so again, those are the 5 things that can kind of delay or put a damper in you applying for a loan or trying to get a mortgage. Okay, again, waiting until you have that 20%, changing jobs, meeting with one lender, moving money around, and applying for a new line of credit. Okay, I hope you guys like this video. Subscribe to my YouTube channel, like the video, leave a comment, let me know what you think, give me some experiences that you might have went through. And like always, you can get in contact with me through social media. My contacts are in the description box below, and I hope you guys enjoyed it. Take care. Have a great day.